How's it, guys? Welcome back to FX Rhapsody. Today we're going to be looking at two more currency pairs that I'm going to be doing analysis on. It's going to be the British pound Japanese yen and also the USD dollar Japanese yen. Before we go to the charts, just go visit my website. It's on the bottom left corner here. We'll be using the COT reports on this analysis. So on the website you can go and download it for free. Just go head over to the resource tab, where you can find the COT reports and many more resources that you can download to your computers and to your phones. Also on the website, on the home screen, there's going to be video categories that you can go and view. All my videos are nicely categorized there, especially for those of you that's getting started with trading, that doesn't know, that's looking at this analysis and don't have a clue of what I'm talking about. And I do get a lot of questions about that. So just go to that website, go to Getting Started. It's one of the categories there, and just, go through all those videos, and I'll tell you all about trading and how to use the charts and all that kind of things, and all the, everything about trading. You can just learn from there. So guys, let's head over to the charts. So today, like I said, we are focusing on the British pound Japanese yen. It's basically the Japanese yen pairs. British pound Japanese yen on the daily time frame. I'm doing analysis from daily, 4 hourly to the hourly time frame. So what we're seeing on the daily time frame is price that made a nice run to the downside, and then started turning up, and now it's looking kind of bullish again. It had a bearish movement, meaning it was trending down, and then it made a turn, and then it started heading up again, meaning that the British pound got stronger, and also against the Japanese yen. Not necessarily that the Japanese yen got weaker, it's just the power of the two currencies, and depending on, which one is the strongest between the two, and that is how price is moving up. So what we see is that if you take your Fibonacci out from the swing, there's going to be a low over here, and there's going to be a high over there. So you take your Fibonacci tool and you take it from that low to that swing high, and then you can see there was a retracement, a very nice retracement. Just if I zoom in a bit, you can see this price moving up, moving down, retracing back into your 62% to 79% area. Basically a clean entry on your daily time frame. For those of you that's only trading on daily time frames, those swing traders, what a clean entry. Price just hitting that area, and you could have made all these pips. Just for interest sake, if you had to take that trade, you would have been basically 600 pips strong, which is very good for a nice little swing trade. For those of you that don't know how to use the Fibonacci, and it's the first time that's seeing that, again, I've made a couple of videos regarding that, and I will put the link in the description. So now that we see that, we had a nice clean entry, price is moving up. So what is happening next? And where is price going to go? Let's go to the 4 hour time frame, drilling down a little bit more. Again, it's just look at how things happened. On my previous analysis that I did, we were looking at around about here. I think we were looking at this area over here, and you can see this equal lows that happened. Okay. And I was also, I made a video about this area over here, saying if price is gonna, break behind or above this area, we're gonna see a movement to the upside. And so it did. Okay. So we were using the Fibonacci on the daily time frame, and on the 4 hourly time frame, we are looking at a fair value gap. So where did the fair value gap form, or the imbalance in the market? So after this break in this structure over here, and you can actually, draw it over there, because there you can see the previous high. Just going to draw it in nicely. So that was the previous high, and as you can see, market started breaking up, forming, going beyond that high, and then started taking out liquidity. Now you could have seen it over here as well. So price going down, going up. There was liquidity intact here. There was liquidity intact over here. Okay, let's just draw it out. And then again, liquidity is, for those of you that's not aware of what liquidity is, I'm not going to draw in all the liquidity, but I'm just going to focus on some of the major ones or some of the higher ones. Okay, I'm just going to draw it in like that. Okay, so basically what liquidity is as soon as, you know, price is moving to the downside, as you can see here. So you as a seller would place your sell orders, and as price moves down, you would leave your stop losses just above your sells. So basically the buy stops will be sitting there all above all these little highs that's forming. And with price action, what happens is price comes in, hunts that liquidity, and that is exactly the case over here. So you can see price moving to the downside, going up again, going down, still forming that liquidity, and then price starts taking out the liquidity. So price, the guys that's having their buy orders here and over there and on the top of this line, you can see price tapping into that liquidity, and then it starts hunting that liquidity on the top there. So those are all the areas that we're focusing on. You know, if you had to go on this 4-hour time frame and just look at your entry over here, especially where price started making a turn and started taking out this liquidity, will be this imbalance in the market, this candle that pushes up over here, and you can see price taking out that liquidity, moving up, coming down, and this, with this imbalance in the markets, it forms a fair value gap right around there. Just going to highlight it out for you, and look at that. So there's the gap between, you know, the candle that pushes up, smart money pushes up with a huge push in the market. So the gap between that, that's leaving in this here from this candle, the previous candle for that push in the next candle, that gap over there is the imbalance in the market, is fair value gap. And you can see price going into that area and then started pushing up. Again, I've made a couple of videos regarding that, regarding smart money concepts. Just go watch it. You know, link is in the description again. So now we have got that area. So price, that's a very nice clean entry for you guys, that to take that buy, and then price moving to the upside. And what happens is it starts taking out the liquidity in the market. You can see price taking out the liquidity and eventually going up and looking at that area over there. Now we have got an area, excuse me, I'm just gonna take this out. So I'm gonna try and leave that in. So my next area of interest will obviously be this area over here. And as you can see, price not reaching that area as yet. All right, so we are still looking at some liquidity that's intact. Now the thing is, will price go all the way to that area? I'm just gonna make sure that I can see this on all time frames. That's perfect. So I want to look at it on the hourly time frame. Okay, so now let's drill down to the hourly time frame and let's just have a look at what basically happened here on this hour time frame. Excuse me. Let's just quickly, I just want to show you some interesting things as well before we go to the hourly time frame. Now I was talking about this fair value gap that formed over here, and you can see it very nicely on the 4-hour time frame. Okay, just gonna make sure that it's also visible on the hourly, because what you see on the one time frame isn't necessarily what you see on the next time frame. So as you can see, a nice fair value gap forming. Okay, we just talked about that. Now if you had to drill down to your hourly time frame, okay, you don't see that so nicely. So we were looking at this, let's make it this area. Okay, so this is the area that was broken. Okay, just zooming in. Okay, so that's your area that market broke, right? There's no, yes, you can argue and say there's a nice fair value gap. You can see price is just, you know, pushing into this area with no actual gap forming on this hourly time frame. So if you had to just look at entries when it forms a imbalance or a fair value gap in the markets, you would have looked at maybe this area over here, and you can see price pushing beyond that, taking out your stop loss. But always use two indicators, not indicators, but I mean, I'm using two, I'm using the Fibonacci and I'm using the fair value gap. So there's two methods. There we go. That's the word I'm looking for. There's two methods of trading and the way that I'm looking at things. So basically I looked at this area over here that was broken, okay, on the hourly time frame, and we could have seen, you could see it on the 4 hour as well. That was your first one, and the second one was obviously this key area. And as soon as that breaks, you know, you take out your Fibonacci, take it from this low, excuse me, to that high. Okay, so you had that swing low, price pushing through it, creating a swing high, you know, price going swing, retracing back, and just taking out, because we are looking at, this is where the gap was formed on the 4 hourly, and to have a tighter entry. And I mean, guys, I'm not making this up. Look at that, price touching that 62%, and that is just, I mean, that's an entry without any drawdown. So I mean, it's just remarkable how things work out. And another thing is, if you had to take that trade, so your stop losses or your targets will be, your first target is going to be your 100, and that is where it breaks that high as well. Second one's your 50 or negative 50, breaks it, coming down, pushing through, and your 100 will be one of your liquidity areas that they've been taken out. Okay, so guys, don't forget to use your Fibonacci. It's such an important tool, and I keep saying that. So now we're looking at this area in the market, price pushing up, coming down. So now we have got this area of liquidity lying in the top way, as we saw on the 4 hourly time frame. Sorry, I just took it out. There we go. So we have got that key area in the market. It's up here. Price has not taken out that liquidity. That's basically lying above here. Okay, so we are anticipating for price to go up, but again, it has been, you know, it has been hunting that liquidity, that's all the moves that going to the upside. So we might see some retracement happening. So I'm definitely going to be looking at this area in the market. Okay, I'm just going to look at that high to see what price does in that area, and I'm definitely going to be focusing on this area over here. So any break in structure on these two areas, I'm definitely going to be jumping on any trade, be it down. I mean, yes, we might be in a depending on your style of trading. So do your analysis from your daily up or down to your hourly time frame. You get a bias for what the day is going to do, especially on the daily time frame. You get a bias for that today is going to be a bullish run, or it's going to be a bearish run, you know, buy or sell. So you get your bias on that, and then you go down to your lower time frames to trade that. So yes, we might be in a upwards trend, meaning a bearish movement, but you could be trading, especially if you're an intraday trader, you could be focusing on sells and making your money on sells in a buying market. So never forget that. Don't just focus on buys when the movement is up, because especially when you're looking at a daily time frame, it's big moves that happen. Okay, but in that big moves, you know, you can drill down to your lower time frames. You can catch a lot of pips the opposite way, meaning you could be selling that retracements or whatever happens. And don't forget that. And especially then you drill down to your 5 minutes, or your 15 minutes, 5 minutes, 1 minute, and so forth. So to catch that moves. But I'm definitely looking at these two areas, especially looking at, you know, price going, hunting this liquidity. So breaking that area, hunting that liquidity that's lying in the top there. So definitely focusing on this high and on this low for any break in structure. Let's look at our commitment of traders report, the COT report. Let's see what all these big banks and institutes are doing. So let's start off with the Japanese yen in actual fact. So with the Japanese yen, you can see that there's been a lot of longs been taking out the market, but more shorts. So basically what is happening is your net position is getting, let's call it stronger. It went from a negative 102,000, 102K basically, down to a negative 94,000. And that is why you see on this little chart here, you can see this push to the upside going, but also zigzagging a little bit. So yes, there is you could argue and say that the Japanese yen is getting a little bit stronger in a sense, but not as strong, especially when you compare it to, let's say, the British pound. And with the British pound, as you can see, a lot more longs being placed in the market, shorts being closed. So that negative, or the net position, it was a huge jump, and that is why you could see that push in the market, basically pushing that price to the upside. Okay guys, so let us move on to the USD Japanese yen. Let's start off with our daily time frame. Okay, let's just zoom it out a little bit. Let's see what happened here. Okay, so on the USD dollar Japanese yen, I'm just gonna draw in this line so you can see that. Come on, there we go. So you can see that we obviously had some liquidity that was lying in the bottom here. So price going up and then pushing up again. Buyers placing their buy orders over there, leaving their sell stops at the bottom. Price action coming down and hunting that liquidity as always, and as price action always does. So price action taking out that liquidity, and then we saw that massive run, bullish run to the upside. Okay, so let's go down to the 4-hour time frame. Yep, there we go. So I'm just zooming out a little bit, just to show you that liquidity was basically over there. Just draw it in nicely. So that was your low, okay, that was formed, and as you can see, price eventually going into that low, started still hovering, and again now all of a sudden you could see price pushing up to the upside, and then this was our first break of structure. Was going to be this area here. First liquidity, sell side liquidity being taken out with this candle, forming a small little fair value gap, not enough, and then you saw another big push to the upside, and again taking out liquidity that was basically all over the show over here. So you have got all this liquidity that was taken out, as you can see, with that big run. So how did you catch that run, or how you could have caught that run? With this huge push on this candle over here, forming that imbalance in the market once again, from the tip of that, or the low of that candle, the high of that candle, we saw that fair value gap forming, okay, the imbalance in the market, price pushing into that fair value gap. And especially with the Japanese yen pairs, it loves to just push on very low down into that gap, and then it started rallying up to the upside. So a very nice little buy that you could have caught, especially if you were trading only 4-hour time frames. But I mean, look at that move. And again, just for interest's sake, guys, that is a very nice amount of pips. It's 330 pips at least, with a nice run, or a bullish run to the upside. So now let's have a look at the 1-hour time frame. We need to change it first. Okay, let us see where the things happened. So we had this low at the bottom. Okay, we had that low. I'm just making a mark there. There we go. So, and then we had this high, and this is where I had one of my analysis as well. Okay, right about there. Okay, and as you can see, just moving to the upside, just zooming it in a little bit, and as you could see, this was a nice clean break in the hourly time frame. This is where the price started moving up to the upside, started taking out the liquidity. You could have caught this little, again, very similar to your 4-hour. I'm just zooming it out in a little bit, especially with this breaking candle over here, forming that fair value gap, or that imbalance in the market. So poof, price going into this area and started breaking out and moving to the upside. So you had that first initial break, okay, and then if you missed that, you could have caught the next one, which was which was another imbalance in the market. So there's two opportunities that you could have caught for this nice little buy to the upside. Okay, so now we are looking at just gonna go to the 4 hour once again, because there's a line. I just don't want to zoom out too much. Okay, we are looking at that high. Just want to draw it in and leave it in there. There we go. And let us just go to the 1 hour. Let's just make sure that it is definitely there. Okay, that's definitely going to be there. So, sorry, the reason I'm doing that is a lot of times I just, especially when I have my analysis and I want to swap between my different time frames, I just make it so that it is visible on a single time frame and not on multiple time frames. So we have got this area, the high that was taken out, as you can see. So now we're waiting to see what is going to happen, because we have got all this liquidity, because it was a massive run for the dollar against the yen. Okay, it was a massive run. So we are definitely looking at, you know, some sort of retracement that's happening. And again, you know, while I'm talking to you, I mean, it's just impossible to miss all of these entries. I mean, there was another very nice entry, you know, imbalance in the market forming. And I keep saying, excuse me, there we go. Keep talking about it. And guys, you just need to start trading it. This is very interesting. So imbalance in the market forming, fair value gap forming between the two areas of two candles. And then look at that price retracing back into that fair value gap, poof, you know, hunting to the upside. But in any case, so we are looking at price hovering around this area now. So I would like to see, again, like I said, price retracing a little bit more. So I'm definitely going to be not biased on the sell, but I mean, with a nice push to that upside, we are looking at maybe some sell opportunities coming your way, especially if you look at your Japanese yen on your COT reports, that, you know, it is looking or hinting that it might, especially looking at the net positions, that it might be getting stronger. And remember, if on the COT reports side of things, I mean, if you look at this, if that net position gets smaller, meaning if it goes into the negative 80s and so forth, you will see price falling, because we are looking at against the USD dollar. So then you will start seeing price going to the downside. So definitely looking forward to seeing what this pair is going to be doing this week coming. So guys, that is all from my side for today on these two pairs. I hope you enjoyed this analysis. It was a little long video, so if you enjoyed it, just don't forget to hit that like button, subscribe to my channel, hit that notification bell for more analysis, some trading content, and whatever you guys want me to do analysis on or talk about in trading or show you. Just comment in that comment section. Let me know what you think, and yes, I'll see what I can do for you. So guys, I hope you are having a fabulous weekend, and stay safe guys, and happy trading.